Hello, investors and future investors. Welcome back to the channel. On today's video, I'm going to show you how to make regular income from investments using option strategies. Now, if you're the kind of person that wants to make a little extra money to supplement your 9 to 5, or you're considering doing options on the side, then this video is definitely for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I utilize my portfolio in order to make consistent income. For today's video, I'm going to show you how to use different option strategies in order for you to make consistent income using your investments. We're going to be using powerful option strategies that many seasoned investors use to generate steady income options trading. And by the end of this video, you'll understand how options can become a consistent income stream even in volatile markets. Now, you guys know how we like to do on this channel. We like to get down and dirty with options, meaning we're going to show you exactly what's going on with the portfolio in order for you to be able to follow along. And if you wish, you may be able to implement these strategies in your portfolio. However, always do your own due diligence before investing. Now, very quickly, we're going to do a quick backtrack to ensure everyone's on the same page. That being said, first things first, what exactly are options? An option is a financial contract that gives you the right, but not the obligation to buy or sell an underlying asset like a stock or ETF at any specific price within a certain time frame. Now, there are only two types of options. Those are going to be your call options, which gives you the right to buy an asset, or put options, which gives you the right to sell an asset. Now, options may sound complex, but when used correctly, they can provide predictable cash flow. And like I said, I'm going to be walking you through every single one. So the first option strategy we're going to be doing today, we're going to go ahead and choose a stock. Our stock for today is going to be Marathon Digital, which is going to be MARA. So we're going to go ahead, we're going to select that, and we're going to open up this stock. Now, right away, once we do that, in order for us to start using options to generate consistent income, we will need to open up the option chain. To get the option chain open, we're going to go down to Trademark Options, and that opens up the option chain. What is the option chain? The option chain gives us information that allows us to make an informed decision. Now, with this particular option strategy, this is the first one we're going to go over. This allows you to make consistent income. Now, how do you do this option strategy? So I'm going to walk you through step by step. So first of all, we're going to go to sell and we're going to go to call. And now we're going to choose our expiration date. The expiration date is dependent on your own risk tolerance. So just for the purposes of this video, I'm going to go to January 3rd. Now with this option strategy, what you want to do is that you want to choose a strike price. Your strike prices are right here above your current share price. As you can see, your share price is right here. So I'm going to go up and I'm going to choose a strike price. Now, as you can see here, I already have two contracts with this particular option strategy. And I did choose the $23 strike price, but here's where you generate consistent income. With the $23 strike price, I did get a chance of profitability in the 85 percentile. Now, when choosing your chance of profitability, my personal risk tolerance is to choose anything above the 80% mark. So any of these strike prices, as you can see, above the 80% mark will work for me and my portfolio's risk tolerance. Now, here's the other thing that allows you to make consistent income. When you choose this strike price with the 85% chance of profitability, you will be receiving money because we're going to be selling options in order to generate consistent income. Now, the money we're going to be receiving is going to be 0.32 or 32 cents, which is going to translate to be $32. Each option contract is multiplied by 100 shares. Now, I do have two of these option contracts, so the premium I received is going to be 30 multiplied by 2, which is going to be $60. Now, making $60 for 2 minutes of work is not bad, I can tell you that. As you probably have already seen, this option strategy is none other than the covered call option strategy. Now, all seasoned investors use the covered call option strategy, especially hedge funds and all these guys. The reason why they use this option strategy is so that they can make consistent income in order for them to pay out their investors. Now, the only difference between these hedge funds and yourself is your portfolio size. They have billions of dollars to invest, whereas we just have a couple hundred thousands. Now, with the covered call strategy, you need to own 100 shares of the stock, or you need to control 100 shares of the stock in order for you to sell against them. Now, this option strategy works perfectly if you're holding a stock you believe that's going to be going up in the long term, meaning if you're absolutely bullish on a stock. Or this option strategy also works good if you're okay with selling the stock if the price rises above your strike price. Now, I did mention that you need to own 100 shares or you need to control 100 shares in order for you to do the covered call option strategy. Now, in order for you to own 100 shares, you could go outright and buy 100 shares of any stock. Now, in order for you to control 100 shares, there is another option strategy known as the LEAPS option strategy, which stands for Long-Term Equity Anticipation Securities. Now, I do have a couple of videos of that option strategy on this channel. I will link it to the video. So just to round up, the first option strategy that's going to enable you to make consistent income using your investments is going to be the covered call option strategy. So now we're going to go ahead and we're going to go into the second option strategy. Now, by the way, this right before we go into that, let me tell you about this strategy. This strategy I refer to as a win-win option strategy. Now, the reason why I say this option strategy is a win-win option strategy is because come expiration date of January 3rd, if Mara is trading at any price above the $23 strike price, then now I'm going to have to sell my 200 shares. But then here's the kicker. I get to keep my $60, which I received previously. That's why you continue making consistent income. Now, it does not end there. In addition to the premium that you keep, that's yours no matter what happens, you also get what's called stock appreciation. So, for instance, the stock is now trading around the share price of like $20. So, if the stock were to go above the $23, you're going to make stock appreciation of $3, which is going to be $23 strike price you sold at minus the $20, which is going to be $3. $3 multiplied by 100 shares, which is going to give you $300. In my case, that's going to be $600 because I do have 200 shares. So my overall gain, if Mara were to go above the $23 price, is going to be $600 plus 60 for a total return of $660. That is not going to be too bad for only 10 days of trading. Now, the other way this trade could go, if come expiration date once again, if Mara is trading at any price below this $23 strike price, then once again, you keep your $33 and you get to do this strategy again the following week until you're assigned. Hence, a win-win option strategy. Now, without further ado, we're going to go ahead and get into our second option strategy that allows you to make consistent income. And for that, we're going to be using SoFi technology, ticker SOFI. So for this option strategy, it's going to operate a bit different and it's kind of the opposite of the covered call option strategy. So right away, we're going to go ahead and we're going to open up the option chain. If you remember, the option chain is where we go to get additional information in order for us to make an informed decision. So here we are on SoFi option chain. Now, once again, these option strategies give you consistent income. So they're always going to start off with selling something. But in this case, it's going to be a sell and it's going to be a put. Now, we're going to go ahead and we're going to choose our expiration date. Once again, the expiration date depends on you and your risk tolerance. Once again, do your own due diligence and then you'll be able to decide what strike date is going to work for you. So for the purposes of this video, I will be going with January 3rd. Now, as opposed to the covered call option strategy, which we just covered, this option strategy is going to want you to choose your strike price below the current share price. Now, the current share price is 15.88, so we're going to go below and we're going to go with the $15 strike price. Now, this is where you make consistent income using your investments. So with the $15 strike price, this gives you an almost 80% chance of profitability, which means there's an 80% chance this trade goes in your favor. But it does not end there. In addition to that, you will be receiving premium. Remember, we're selling something, so we will be getting premium. The premium we're going to be receiving is going to be 0.18, or as you well know, in option terms, that's going to be equal to $18. 0.18 multiplied by 100 shares. Now, this option strategy is none other than the cash secured put. Once again, seasoned investors, hedge funds, all the big guys, they all use this option strategy in order to generate consistent income. Even my guy, Warren Buffett. So there's no reason why you should not consider this option strategy as part of your overall portfolio. So once again, let me show you how you're going to make consistent income with this option strategy using your investments and using the cash secured put option strategy. So come expiration date of January 3rd, if SoFi is trading at any price below this $15 strike price that you chose, then you're gonna keep your $18. Remember, we always get to keep our premium. That's why we keep growing our portfolio to get consistent income. However, you're now gonna have to purchase 100 shares at the $15 strike price. Now, this is another win-win strategy. Why is this a win-win strategy? If the trade goes this way and the share price is below the $15 mark, then you just paid about $84 less for the stock as opposed to buying it outright at 15.84. Now, how do you pay $84 less? So it's going to be 15.85 minus your $15 price that you chose, and the difference multiplied by 100. That gives you a win because you're now able to have 100 shares at a reduced price. Now, the other way you're going to win is your premium. You always get to keep your premium no matter how the trade goes. Now, there's also another way this trade could go. So once again, come January 3rd, 2025, if SoFi were to be trading at any price above the $15 strike price, then once again, we keep our premium. I keep saying this over and over and over. We do not lose our premium. We keep our premium, and that's how we grow consistently and we get consistent income. So we keep our premium, and then we get to do this option strategy again, over and over until such time that we are assigned. So the two option strategies we went through in this video that's going to enable you to make consistent income using option strategies is going to be the cash secured put and also the covered call option strategies. Now, there are other option strategies that allow you to make consistent income, and I will be doing those in a further video. Those are going to be iron condors. You also have credit spreads, but that's, like I said, that's going to be for another video. So why are options so effective for income? Well, options is a versatile tool, and here's why they work so well for income. I'm going to give you 3 reasons why they work so well for income. Number 1 is going to be a consistent cash flow. Like I just pointed out, with these two option strategies, we actually selling. So because as soon as you perform any one of these option contracts, you receive a premium right away, which you get to keep no matter what. The second reason is going to be what's called the customizable risk. That allows you to choose any strike price and also any expiration. Now, your strike price and your expiration that you choose has to be aligned with your goals. So remember, always do your own due diligence to select what strike price works for you and also what expiration date works for you. Now, the third reason why options are so effective in order for you to continue making consistent income is going to be the compounding potential that it showcases. If you were to take all your premium that you receive every time you were to do any one of these option strategies and you were to reinvest those premiums, you're going to see your portfolio grow with exponential growth. So that is why these option strategies are so excellent in order for you to gain consistent income. So, as usual, it would be remiss of me if I do not let you know the risk associated with any option strategies. Even these two win-win option strategies, there are some risk involved. So, one risk that could come about with these option strategies is going to be assignment risk. When selling options, you may be obligated to buy or sell shares at the strike price that you chose. So, always choose a strike price that you do not mind being assigned. Another risk is going to be the market volatility. Sudden price swings can affect your position, which brings us back to number 1 risk. Always choose a strike price or strike date that works for you. So even if you are assigned, you do not mind. Another risk is going to be over leveraging yourself. Now, I haven't spoken about leverage on this channel in detail, but you do need to be aware of that. Now, Robinhood, as well as these other brokers, are going to give you lots of money to use as margin. Be very careful how you use these margins and do not overextend yourself. You never know if the market is going to go up or go down. But always remember why you're in the market. You're in the market to make consistent income over a long time basis. Now, one last thing you always need to do is make sure you chart your gains and your returns. Every single time you were to do these option strategies and you receive premium, always chart what you're doing. What that does is that it allows you to see any progress you're making or any risk or losses you may be taking. So this is just one of my charts that I have here. And as you can see, I have my dates to open, my dates to close. I have the symbols that I'm using. I also have the strategies that I'm using. So the CC is going to stand for covered calls and the CSP is going to be stand for cash secured puts. The other option strategies I will go over in a further video. To the end, you're going to see the amount of premium that it brought in. Now, if you want a copy of this, it's available in the description below. So in order for you to make consistent income, consider options trading. This can be a game changer for anyone to supplement their income. So whether you're saving for retirement or building wealth like I do, these strategies offer flexibility and growth. Now, if you guys found any value in this video, hit the like button, subscribe to the channel. But most importantly, if there's anyone out there that can benefit from this video, feel free to share this video with them. And until the next video, keep making consistent income.